No, I've received no apologies. Thank you. Can I sign the record of the meeting held on the 10th of January as correct? Yeah.
The areas of auditor risk assessment, where Grant Thornton is required to make inquiries of the Audit Committee under auditing standards. Paragraph 3.1 on page 15 details the main areas of management oversight that auditors are required to gain an understanding of. The report from GT, which is a joint report really, we've had a fair input into this as Medway Council, is attached to Appendix 1 to this report and begins on page 17 of the agenda. Matt and Ibby are here from an audit point of view, so I'm sure they're happy to answer any questions, as am I, Chair. Thank you.
Thank you, Andy. Take any questions? Councillor Hackwell, thank you.
Thank you, Chair. First off, the Lothbury Fund, is that now done and dusted? It was in last year's provision, so I guess it's finished. The Lothbury Fund? Yeah.
No, I know that's treasury.
But it's done and dusted. The provision's been made, and that's the biggest loss we're going to get.
Yes, I can confirm that is the case.
Okay. In the report, it asks that the councillors agreed to borrow 20 million, which we approved at full council. Is it possible to get a full breakdown of that? Because I know that the RAC was only 12 million, so I'd like to understand what the other 8 million in detail is that we're spending. So that's a question. How are we? This is the audit. The Grant Thornton. No, I'm asking questions off the Grant Thornton. 22. That starts with the Loughborough, and 23 goes on to the 20 million repair. It was just the 20 million that we approved at full council for the repairs to Gun Wharf. I just wonder whether we know that it's 12 million for the RAC. Could we get a breakdown, a detailed breakdown of what the other 8 million is?
I can ask the service to provide that. I mean, I don't know that they're in that position to give the detail yet. It was a very broad figure. The RAC is the bit that's obviously they've let the contract for, but I'll ask the question.
Thank you. Further on, we mentioned, come on, it's a bit slow, my PC. There's a detail in here that says that you've moved the monthly revenue budget to monitoring to the CMT level and privately with the Cabinet. Will that be available to members of the opposition as well, the monthly finance report?
So the process that we've in terms of our reporting through Cabinet and overview scrutiny, we're sticking with the quarterly timetable. But on the back of the SITFA resilience report, they recommended that we need in-flight information for management. So we're doing the monitoring more frequently on a monthly basis, and that's being reported through CMT. But obviously CMT members will discuss that at their portfolio holder briefings. So it won't be a kind of formal report that you would see normally at the quarterly monitoring. It's the information that it's a CMT report, and then we would expect directors to discuss it with their portfolio holders.
But not with opposition or even opposition spokesmen?
That's never been the case.
Yeah, it is.
Yes, there's a new report, but it's not in the terms of reference unless you want to change them. You can always ask. We can ask it. We can ask as audit to see it. But I remember asking previously to see it and being told no, because it isn't a formal report until it becomes part of the formal reporting.
I guess if I'm honest, we hadn't thought of it. Can I take that one away, please? Yeah.
Can we be clear about the wording of what you're taking away, just so that we record it correctly here?
So
You want sight of an informal report that goes to the leader
I
and
think-
the cabinet. Is that what you're asking for,
I
Councillor
would
Hartwell?
ask as opposition, not necessarily all of the, but maybe the shadow cabinet or something, that we also give as much information as possible of how the council's performing. And if there's a report being made, then why not share it with us?
Can I give some consideration to how we do that?
Yeah.
Because it's a report for CMT consumption, so it's for management information. Obviously, I would expect directors to discuss that with their portfolio holders. I hadn't, if I'm honest, given consideration to whether that would be of interest to opposition. Can I go away?
And not 2.5, so you can add to the...
Can I give a bit of clarification around temporary housing. I work in the sector, so I know a little bit about it. When you are booking temporary accommodation, it isn't always on a long-term basis where you can go in and negotiate that this particular piece of accommodation is going to cost you exactly X. And sometimes you get lucky because stuff comes on the market that is actually X minus. And this happened to me during COVID in my own business where I work for Hestia. So I think that actually we got lucky here. I think you would have questioned if it had gone the other way and we were overspent by 1.5 million, as has happened in the past. And and that was only as point of clarification. You cannot always do temporary accommodation as a specific amount. And in public health, a lot of stuff is longer term bought, and you know that, yeah?
I understand, but it just
So the difference between public health and the temporary accommodation is the temporary accommodation budget is funded from a combination of grant and the general fund, council tax and non-specific grant, whereas public health spend is all funded from public health grant. So what we've done by drawing down the balance of the temporary accommodation grant to fund temporary accommodation, the underspend is on the general funds funded side, yeah? So that we spent less of the general fund because we had general fund pressures elsewhere. The difference with public health is because it's funded from public health grant. Generating an underspend there wouldn't do us any good at all because that would just have to go straight back into reserves because it's ring fenced. That's the difference in why we didn't treat them the same way.
I've got a couple more and then I'll finish. When will the group accounts be published? Because last time they were published, there were significant errors in them, according to the report, and they had to go away and look at it. And they should have been published already, and they haven't been published. And my final question in this section, around the fees. We've got 392,000. Now, my recollection a few years ago is it went up to just over 100,000. We were horrified. Yeah, and we were horrified. So it's now doubled, and that doesn't include the audit of the group accounts. So why such a significant increase? I mean, it's huge. How much liability will we expect for the auditing of the group accounts?
So first of all, the group accounts, we've had the accounts for Norse and Kindy. We haven't yet received them for MDC, which is why we haven't been able to pull together the group accounts. Now, I'm not going to go into it in a public meeting, but there was a bit of a tragic event that the company has had to deal with, and that's part of the reason for the delay. I'm not going to explain the detail now, but I'm assured that by mid-August we should have them, shouldn't we? So we should be able to get the group accounts pulled together then. In terms of the audit fee, I think I'm going to defer to my colleagues up the end there to explain. Thank you, Matt.
I knew the question was come. We might as well have it now rather than on the audit plan. So I think Andy's paper on the plan kind of helpfully kind of said. I would say these are not fees that Grant Thornton has set. These are fees that the public sector audit appointments have set as a result of the tender process. So this is the first year of the next 5-year term. The relevant firms tendered for pieces of work. That work was then awarded by PSAA to us as firms. You were given to us. As part of that process, they set the scale fees. And within the paper that Andy's kind of put up in the front of the audit plan, he shared a bit more how it went. So the starting point was the 22-23 fees. There's an additional element for changes in scope. and then there was an adjustment of 151% on top of that to reflect the rates at which ultimately the market was prepared to deliver that work. Now, I accept we were one of those people, but we were putting into the, our tender never named the price per audit per se. We gave a scale of ranges we would work to. PSA then pulled all those tenders together. That was assessed a market rate for that fee. So it's all there on the PSA website. There is more to it than Andy's pulled in. I think Andy's pulled in, that's kind of the key summary, but there's a lot more on now. We can share the link afterwards if members are interested as to how it's gone through. There would have been a consultation process. Perhaps Phil, you might have seen that, or others in the finance team. So it's, there is quite how much to say there is in it ultimately, but the primary aim was they wanted to try and reduce under the old framework, the fees were set at a point in time without any real consideration for how the standards would move over a 5-year cycle, which is why there was a lot of fee variations and those kind of things. They're hoping to avoid that. They've kind of failed already because they didn't put one element in, which you'll see in the plan we've drawn out separately, and that's we're hoping to keep those to a minimum this year. We don't want that, but we understand the challenge ultimately of that. But it's where PSA ultimately view the market for this work.
Can I ask Phil to give some more feedback from what the council was involved in?
So Matt's explained where this has come from. In the past, when we've been hit with significant variations for whatever reason, I have had robust conversations with the auditor, as has this audit committee actually, about where those fees came from, the justification for them. But in this context, I don't really have an awful lot of chance to do that, because we agreed that the PSAA would let the contract for us, and we'd abide by whatever that scale fee was, and that's what that's what the market is dictating. Because I mean the other option that we have, I mean we've signed up for the 5 years now, but when it comes around again, the council could say, no, we're not signing up for PSAA or whatever it happens to be at the time, and we want to go plough our own furrow. But we did have that discussion at the time, and I suspect we wouldn't be able to cut a better deal.
And also, I just wanted to add that officers and myself spent a lot of time making a submission when it was in the negotiation phase, and just wanted to thank officers for that. They were very logical points made, and I think of other people, but I think what has been pointed out to us was over the crisis in the market, and now what the restricted number of companies that are interested in the work. And Councillor Lawrence wants to get in. Or do you want to come back in, Matt, first?
The only thing I just wanted to say for transparency at this stage, so we'll move on to talking about the backstop when I get to the next item. We will have backstopped 2 years audit. That should entitle the firm, the council, to a refund for the fees that have been paid over, because under the old contract they were paid at the year the work was meant to have happened, which clearly hasn't happened. So that's 2 years worth of audit fees that will be due back to the council. I don't think it will be 100% of that, but it should be a substantial sum. We know PSAA are going to have to legislate that. I think there's probably quite a lot of audits where they're going to have to work out how much they give back, and quite how they do that we don't know. We're pushing it because trust me, it's the question lots of you are asking, what's going on, but there will be an element of that. So I don't want to put on record a particular number, but I would hope it's a substantial amount of what has been paid over for those years we've not audited. And I mean, it feels only fair, ultimately, is my view. Obviously we're not in control of that decision again. I hope they come to a sensible position, but yeah.
Thank you, Chair. I think who likes paying audit fees? No one likes paying audit fees. It's a bit like paying your lawyer or your accountant. It is what it is, isn't it? I think it's really, if I could just make a comment, that it's really down to officers to get as much value out of that money as possible. And I'm sure with Grant Thornton wanting to be really helpful, you might get some other things out of the audit as a part of that. I only have one question. I was a bit confused why there were 2 reports on the audit. I know, but I know one's very much around the work plan, and I'm not quite sure what the other one is as well, but it doesn't really matter. I've just got one question on this part of it. Did the auditors arrive at any knowledge of whether the council is putting enough resources into fraud prevention? Is there any danger that we can't identify certain levels of fraud because we simply don't have enough resources to do that? Thank you.
I mean, so the questions we've asked in that fraud risk assessment element of the document are standard questions we would ask all authorities. You know, I guess from our perspective, at one level, we're largely interested with fraud that could be material to the accounts, which is obviously quite significant fraud. We do obviously understand there's other elements going on, and that's, I guess, kind of what feeds into there. I guess, obviously, in a way, we do make a little bit of an assessment as part of our value for money work. I suppose ultimately that's something that, in terms of whether you feel enough is going in, I suppose that's partly a work with internal audit, because that's ultimately their primary function, is to help you manage some of that. You know, we're more interested in that material element. I guess, you know, on one hand, it's kind of, if there's not material fraud, then, you know, it's sufficient resource. You know, could say it's sufficient, but I guess it's a moving ballpark, isn't it? I think.
Chair, if I could just come back. I read with interest the material levels, but they are quite substantial. And I wonder, is there any danger of much lower fraud, but when you accumulate it, it becomes quite material? I've got no knowledge. I'm just, as a new member of this committee, I'm just asking what I hope is an intelligent question for my first meeting. Thank you.
I mean, we'll keep an eye on it. I guess, you know, in reality, it's kind of some of the common things would be, you know, housing benefit, those kind of things, you know. But again, I guess from our perspective, it's one of those, I suppose, from our perspective, even if you had numerous of those, the cumulative amount might not be a material from an accounts perspective, but equally, you know, from the taxpayer perspective, it may well be material, I guess. So we always have to be quite clear that, you know, that's looking at an accounts materiality rather than what you as an authority, you know, if you're under pressure, £500,000 worth of fraud is quite a substantial sum, isn't it? I say, but that ultimately, I guess, is where, you know, internal audit, account fraud come in. That's their kind of day-to-day focus.
Chair, just one final question. I'm just wondering whether the auditors can arrive at, I'm trying to keep finding the right word, maybe it's too long in the day. What I'm concerned about is, do members of the council get the right level of reporting to identify if things are going awry early enough on in the process? I think I'm really feeding in on Councillor Hackwell's earlier comment about monthly accounts. So I was at an ONS recently, Regen ONS, got a massive capital budget, lots of revenue, but we're not going to get any reports until September or October, or possibly August. So for me, we're always looking at something that's very historical in nature. Like all public sector organisations, everything looks good for the first 3 quarters. Well, maybe not everything looks good for the first 3 quarters, but everything goes off a cliff in the 4th quarter. And, you know, the chief financial officer has to run around finding £6 million of extra reserves in order to help balance the budget. If it's not in this part of the report, it might be in the work plan, but I'd be very interested to hear whether auditors think that members are getting the right level of information at the right time so that we can do true scrutiny of the council's finances. Thank you, Chair.
So it's not in the report, as it not in even the bits on this paper, but we will pick that up as part of our work on the value for money conclusion and our auditor's annual report, which should come later in the year. Now, there'll be a particular section in there which I guess broad terms is governance. So it covers a range of things, but one of the things we will look at is around timeliness and quality of information that can not only to this committee but a range of committees to do prior to that point, allow the council and its committees to make the decision it needs. So it is something that's on the broader work plan. We had the initial kick-off meeting on that internally this morning, so that will take place over the next couple of months. So when the audit findings report is there, that report should be alongside it, and we'll give you more detail on that.
Perfect.
Councillor Nestorov, thank you.
Thank you, Chair. I just want to ask a couple of questions about some things that it's interesting. So, at the accounting estimates, we talk about property, plant and equipment valuation. I want to know if we do that every year for all the property? Because obviously, if something is left unoccupied, owned by the council, it will depreciate quite quickly. So my point is, are we doing every year check if the property value with the report is accurate, and are we checking on things that hasn't been used for a while? Maybe some of this land or property could be sold off if it's unused and it's just costing us money.
Can I ask Andy to answer that one, please?
Yes, thank you, Chair. On the actual valuation of PPE, so under the SIPVA Accounting Code of Practice, all assets have to be valued at least every 5 years. So we go through a process every year where at least 20% of all our assets are valued, but it tends to be a bit more than that. We have certain assets that we value every year. For example, our council housing stock is valued every year. Our investment properties are valued every year, but our other assets are on a rolling programme. We obviously take particular, every year we will look and see if there's anything happened that could affect the value of either an asset or a type of asset. So for example, one year we valued a car park and realised that something had happened in the valuation methods and the type of things that were going on that would affect all car parks. So we went round and revalued all car parks because of that. So those sort of things happen regularly to make sure, as auditors will quite tell us, that we are clear of material misstatement of our property, plant and equipment. Also, our property team are regularly looking at assets that either may not be used anymore to see if anything, whether we still need them, and that's an ongoing process that the council undertakes. Again, it goes on within regeneration culture and environment.
Yeah, because my thought is a lot of properties prices are rising quite fast now, especially the last couple of years we have massive inflation, and this will rise the prices eventually. As well, the other thing I want to ask about buildings like the council, is there a way that we can have insurance for that buildings, for something like the rack when it happens, to be able to mitigate the risk more?
Thank you. So with regards to insurance, all of our properties are insured for all the normal things insurance companies would insure for. However, for things that are considered, well, the things that as you as an owner are responsible for looking after, for looking out for, insurance companies, if you're considered you haven't taken enough care, or it's the sort of thing that could cause damage that you should have been aware of, they will not insure for that. No insurance company will insure for that. So we found that with RAC. No insurance company will insure us for those sort of things. Hence the conversation at the beginning about the amount of money that we're setting aside for Gunwolf.
So in the case of RAC, nationally it became apparent that RAC was a discredited material, and we became aware. Now, had our roof collapsed at some point in the past, we would have been insured at that point. But because we now know, we can't unknow that, and we'll have to replace it, or you know, we've got to assess that risk, how quickly we replace it now. But if we don't replace it and it collapses, then we wouldn't be covered anymore. That's how insurance works.
Oh yeah, yeah. on on the point that Councillor Hacklow made about more detailed reports, I'm a new councillor, I don't know how things work. Is that a normal practice that's been followed through the years before? Like, because you requested
monitoring report.
monitoring report to be sent to the opposition. So was that something that was followed all the time, or is something new?
So the process we've been following up to this financial year is that we undertake the monitoring process broadly quarterly, and it goes through the whole process. It goes to directorate management teams, then to corporate management team, then to cabinet, then overview and scrutiny. Under that process, overview and scrutiny is seeing it very late, and I feel that you're not actually getting timely information. But it boiled down to resources and our ability to service a more frequent monitoring. But then when SITFA came in and undertook the resilience review, they felt that management didn't have sufficient early warning of issues with the monitoring. They recommended that we go to a monthly monitoring process. So we did two things. As part of the budget, we put additional resource into the finance team to facilitate that. But obviously this is all happening in indecent haste because we only got the conclusions of that report after Christmas. And we had to set up a more frequent monitoring process for the new financial year very quickly. And at that point, we took the view that we would do something that we could report at least to management through CMT, DMT, and CMT. The frequency and the timing of cabinet meetings and overview and scrutiny meetings would have meant even if we tried to take that through members, you wouldn't have seen anything much earlier. Now, if we get to a place where this monthly monitoring, we get a system in place that's much slicker, and that is our objective. That's what we're trying to do at the moment. We're trying to use the system better. We're trying to interface that with Power BI, which is a reporting tool, so that we can do the monitoring much more quickly, much more slickly. If that gets to a decent place, maybe we will be able to go beyond quarterly monitoring to members, but at the moment it's just not practical. So we're seeing that the fact that management are seeing it more frequently is an improvement on where we were at this stage.
I think that's important, the management to see it, because they're the one at the end taking the decisions. And yeah, system, it's a good idea. Hopefully you'll get there eventually.
I've got Councillor Bowen and I've got Councillor Lawrence. I've just got Councillor Bowen. Thank you.
I was wondering why the council housing stock's valued once a year, why the exception?
I think the fact that it is a residential dwelling stock, it is driven by that sort of market, and therefore that is invariably deemed more risky from a point of view of changes in values. So from that point of view, it's always been set up to have that an annual review of everything.
If I've got no more questions, can I go to the Vice Chair? And are we content that we leave the wording of that for Phil, that Phil is going to make his best endeavours to provide details of how Councillor Hackwell's request can be dealt with?
Yeah, I'll give consideration as to how.
Vice Chair?
I move the recommendation that at page 15 that the committee is requested to consider whether the management responses provided are consistent with its understanding and whether there are any further comments they wish to make. Phil Watts is to give thought to sharing monitoring reports more frequently.
Is that agreed? Thank you. Thank you. Now we move on to the draft audit plan for the year ending March 2024, and I think this is going to be with Andy as well.
Thank you, Chair. So the report details the auditor's assessment of the risks and materiality for the 23-24 audit of statements, the projected fees for the core work, which we've already sort of discussed a little. At this stage, it's important to say this is a draft audit plan. It is not yet finalised. That's shown at Appendix 1, commencing on page 51, and sets out the auditor's approach to the 23-24 audit. And obviously, if there are any questions, either myself or Matt and Ibby will obviously be happy to answer.
Any questions? Councillor Lawrence.
Thank you, Chair. Yeah, it was an interesting read today with my lunch. I did get through it though. I really some of the questions have already been answered, but the one that occurred to me was under your IT systems audit. So I note that you're going to be auditing the council's cyber security resilience, and I've been very fortunate to have some conversations on that. I think what they've got down there is pretty good. But in this really and highly interconnected world, I wonder if you've considered the risks to the council for key suppliers and their impact on their cyber security, and whether the council, using a proportionality, actually does enough work to check that these key partners are cyber resilient themselves. And I'm reflecting on recent cyber attacks on NHS hospitals and blood transfusion services, I think from memory. But what would be the impact on the council from a key supplier suffering a cyber security attack and our ability to deliver our services because we've not asked the right questions of those key suppliers at procurement stage? Thank you.
Yeah, it's an interesting question. I mean, so our work primarily would be based on the council's controls over the council systems. I think we might, I guess, as part of the broader value for money work, if we felt there were particular concerns over sort of, the management of suppliers, we might say that. I don't think we would ever go into that level of detail and go, is the council asking every one of its suppliers, has it got a valid cyber security plan? That wouldn't be within our remit. I guess, as I say, if we felt there were concerns at a higher level from what we saw, we would flag that. I say the primarily aim is our work at, on the council systems and, are they resilient? I think cyber security, again, is, understandably a hot topic. I guess we will look at it as we go. I think, as an authority, you can only be as well prepared as you can be. Ultimately, the sad thing is a lot of these hackers are ahead of even the software providers ultimately. So actually, as long as you're doing those fundamental, as long as you're sticking with your software supplier and you're updating your systems as regularly as you can be, I guess that gives you the most protection you can ever have ultimately. These people are ahead of the curve ultimately, and there's only so much you can do, and any authority can do in this situation, I would say.
Can I just focus my question then to a specific, can we just at least check we've got the right controls and processes in place in order to make sure that we're not opening up? I know as a company that in my business we write a lot of software and we're involved with other insurance companies, and they will send us a security questionnaire that's the most horrific document you've ever seen, but we have to go through a process. I just want to be assured that at least we're asking the question based on the size of the entity we might be working with, because obviously if you're employing a gardener to do some work in a green space in Hempstead and Wigmore, you're not going to want them to have a cyber security policy. But if you're contracting with a very big organisation, maybe around pension management, for example, you'd expect the council to be asking certain questions around their cyber security and resilience. Thank you.
So I think it's difficult for us to look at it because of the level. As I say, we would look at it at a very high level. What I would suggest is that's perhaps one to liaise with Phil and internal audit, because they would be able to look at that in far greater detail and at far lower cost than we would ultimately. I think that's the best way of looking at that.
Yeah, thank you, Matt. That was basically what I was going to talk about in terms of it would be for internal audit to check that control is in place. But what I will say to you is that cyber security is very large on our strategic risk register. And we do take it very seriously, and I think we're very fortunate in that our head of ICT, his background is cyber security. You know that, you've had those conversations with him.
I'm just reflecting on the external risk,
Yeah,
not the
no,
internal. I'm very satisfied with
Yeah.
what I've seen on the internal risk. It's the external risk, and maybe a programme of work with internal audit just to look at a few of our larger contracts to see if we even asked the question
I will
around
take that
cyber
one
security.
away and talk to Keith about it.
Councillor Nesterov.
Thank you. I just wanted a bit clarification. On page 31, they talk about IFRS 16 leases that needs to be converted to a new. So it's page 31 of the appendix 1.
Sorry.
One second.
Sorry, I missed the question.
So there is a section that speaks about IFRS 16 leases that needs to become. I just couldn't understand what that means, and I just needed more clarification of that.
So IFRS 16 is a new international financial reporting standard that has been in for a fair time for the private sector and a fair amount in the public sector, but it came into being from April 2024 for local authorities. So what it means is there is a slightly different way that we have to account for leases, depending on the type of lease, the value and how long they last. So in simple terms, where we are the lessee, we are leasing something. In the past, if they were classed as operating leases, which tended to mean it was in effect a hire agreement for something for a period of time, we wouldn't hold them on our balance sheet. But under IFRS 16 we do, and there's various calculations we have to do, and there will be significant disclosures within our financial statements that we'll have to ensure that we have got there. And obviously Grant Thornton, as our auditors, will be all over that when it comes to our 24/5 financial statements.
So that means that the financial statement will change significantly, accounting for the housing stock and all the property that we have.
It wouldn't affect the housing stock. They're already on our balance sheet. They're not leases,
Okay,
but
yeah.
these are various leases the council will have. Some of it could be for buildings, some of it could be items of equipment. There are a whole plethora of things that we have to reach out to all directorates and make sure that they're aware and we know how to account for that. There's all sorts of information that under the old system that you wouldn't need, but we will need under the new system. So we will have to talk with lessors, those that are leasing us the equipment, and make sure we've got the appropriate information that we need for each of those.
Thank you, that was very informative. I have just one more question. That second one is easier. Do you have any strategy in place to clear the audit backlog from previous years?
I thought we discussed this, Marianne.
That's fine. So I was going to say, that's one thing that's worthy of mention. So, so this has kind of changed again briefly. So there have been long discussions in the sector involving all the stakeholders, so the audit firms, Deluxe/MHCLG as they're now called, the FRC, sit for around returning the overall system to where it should be. I guess, and that's where the backstop, I guess, got its initial sort of billing, which effectively was to draw effectively a line in the sand and say any audits not finished by that date would be disclaimed. That was then gone, and then you would, I guess, move forward from that date. The original proposal for that was that the backstop would land at the end of September. So at the end of September 24, any old audits would be disclaimed. You'd get a disclaimer opinion, which, so for the council, that would be 2 years. It would be disclaimed under that method. That was all before Mr. Sunak called the election, devolution to Parliament, etc., which effectively what that has meant is the whole parliamentary timetable for that process has been delayed. So the earliest we now understand the backstop is going to land will be the end of January 25 for all years prior to 23-24, and then there will be a backstop for 23-24 in May 2025. We don't envisage threatening the May 25 date, but it does have. It's one of those things. It has a, we're slightly in a different place because obviously we, as your incoming, outgoing, or prior year auditor, can disclaim those opinions. We need to be careful about the timing of it as and when it all goes through. But I guess for now, we will carry on with the 23-24 audit, and that's the plan that's in. That's what we've started in the last couple of weeks. We may have to synchronise the signing to kind of get those things to follow, because you can't sign the 23-24 opinion until the old disclaimers are signed. So that's the plan, and I guess that's the time frame. Obviously, this is all subject to parliamentary approval and those kind of things, but we get the sense everyone wants to move into that place. The big unknown in all of this is, what does that mean for your opening balances? So in the 23-24 accounts, there will be a set of opening numbers which won't have been audited. And the question is, within the sector, how do you deal with that? If you took the standards at its purest view, you'd basically have to do a full audit of those opening balances, which roughly we think would add 70% to any audit. We don't think that's, as much as I'm a purist, or we as purists look at that, we just don't think that works for the sector. It's just not the appetite. The fees wouldn't cover any of that. It's just doesn't seem the right answer. So what the view will be, and again, this is subject to all of the legislation being approved, is that we will rebuild that assurance over time. So over perhaps a 2-3 year or 4 period, we will be able to audit chunks of that in each of those years. So at some point, hopefully within this 5-year cycle, we return the council to an unqualified opinion. No one in the sector is making this decision lightly. None of us came into doing external audit, preparing accounts to issue disclaimed or qualified opinions ultimately. But I think the key driver is, for this information to be useful, it has to be timely, and I think that's the only way that the stakeholders can see a return to some degree of timeliness ultimately. So it's not a perfect solution, but I think it's the solution the sector is I guess the best worst, I suppose, is probably how I would say it from my perspective.
Do I have any other questions? Okay. Vice Chair, please.
I move recommendation at page 47 that the committee is recommended to note the draft audit plan for 2023-24.
Seconded.
Is that agreed?
Agreed.
Thank you. I now move on to the Treasury Management Outturn Annual Report 23-24. And I'll ask Andy again to introduce this, please.
Thank you, Chair. I'll try and be as brief as I can, but I just want to explain a few things here. I think it's important. We do have some new members to the committee, so the first thing I want to say is the purpose of Treasury Management is twofold, really. It's managing the authority's cash flow to make sure we have cash available when it's needed, and it's also there to help fund the capital programme. SITFA have a definition of Treasury Management as the management of the local authority's investments and cash flows, its banking, money market and capital market transactions, the effective control of risks associated with those activities, and the pursuit of optimum performance consistent with those risks. So this report summarises the Treasury Management activities for the year 2023-24 and our compliance with indicators and limits set as part of the Treasury Management strategy that was taken through Cabinet and indeed this committee back in January, February of 2023. So the first thing that's important for me to say is that our borrowing does not exceed our capital financing requirement. This is mentioned on paragraph 5.8 on page 95. The capital financing requirement is the value of our long-term assets that have not been funded from grants and contributions, revenue, funding or capital receipts. So keeping the borrowing below the capital financing requirement demonstrates that borrowing has been used only to fund capital expenditure. It does not in itself mean that borrowing is affordable. So the Treasury strategy I've mentioned before sets out the overall limits to the amount of borrowing. The operational boundary is the maximum amount of borrowing the Council expects may be needed at any one time. This was set at £640.4 million, and paragraph 5.11 on page 95 reports that our maximum outstanding balance was £464.7 million. We're permitted to exceed this limit, but not the higher authorised limit, which includes the contingency buffer. This limit was set at £704.4 million. The table in paragraph 6.4 on page 97 shows the limits for the proportion of loans maturing in various timeframes. In addition, the percentages shown, in addition to the percentages shown, a monetary limit of £150 million was set for loans repayable within 12 months. There are no breaches to this limit to report for 2023-24. Still on the subject of debt maturity, there's a profile shown in a graph at paragraph 6.1 on page 97, which shows the repayments due each year. In an ideal world, maturities should be spread pretty evenly over the years, but obviously what you'll see is it's very much tipped towards the coming years, and that's really on the advice from our Treasury management advisors to favour short-term borrowing at the moment. The market obviously indicates that interest rates are likely to come down in the not too distant future, so it would seem perhaps not the best thing if we started to borrow too longer term at the moment. But it obviously is something that we'll review with those advisors, and obviously Phil will be very keen on making sure that we make the right decisions on that. Our aim is to keep borrowing to a minimum, which is why generally we have very little available for Treasury investments, with the exception of investments in our property funds, which obviously I'll mention in a minute, and the loans to subsidiary companies. Other than that, we have no long-term Treasury investments. The graph at 10.4 on page 103 shows our benchmarked investment performance is in line with expectations. As you'll see, Medway is represented by a slightly larger, darker dot that shows in the middle of those tram lines as such. What it basically shows is where with the majority of local authorities, and we're performing reasonably, not the best but not the worst. But I would say is for those that are having higher returns, they will take greater risks in order to do that. Onto our property funds. This will be the last thing I really want to mention. Our property funds cost just under £23 million when we took them out several years ago. At 31st of March 2023, the value had fallen to £21.1 million, but with the fall in commercial property values, had fallen to £19.9 million by the 31st of March this year, 2024, and that's detailed in paragraph 6.6 on page 98. However, while capital values have fallen, the funds continue to generate income of about £900,000 each year. Under the current accounting rules, this income is credited to the Council's revenue account, but the changes in capital value is accounted for through reserve movements on the balance sheet unless investments are sold. As you'll see, one of our property funds that we invest in, Lothbury, ceased as at the end of May 2024. And we've mentioned earlier on that whilst we are expecting a loss, and I think at the moment it's looking like it's going to be in the region of £1.4 million. We haven't quite got that information. We have, as was said earlier on, made a provision as part of our closure of 2023-24 accounts. And I'm confident that provision will certainly cover the loss there is. So with that, I'm happy to take any questions that members may have.
Councillor Nesterov, followed by Councillor Hackwell.
Thank you. I just want to start with a comment, and then I'll have a question. I noticed that per strategy for 2023-2024, the predictions were quite higher than the actual, and we managed to cut the capital expenditure by almost half. It's on page 91. So the per strategy projection for the housing and for everything was more than the actual what we spend on. Just wanted to say that in these hard times, actually managing to spend less, it's a very good thing, and it's something that I needed to comment on. Just well done. Then I want to move on the housing funds that you just mentioned at the end. Obviously, Lothbury has ceased, and we're going to get our investment back with some loss. Is that money going to be reinvested in another fund after that, or maybe spread around? Maybe diversified to get more, to be more resilient, for not something like that to happen again?
Okay, I'll certainly take the first question. I may defer to Phil on the future of what our thoughts are on investing the money that comes back from Lothbury. So it's important to say that when the strategy is put together, firstly, the capital programme has not even been approved for the following year. That comes at the same meeting. So when we're preparing that strategy, some of it will be based on some of the things that are in the capital strategy and some guesswork of the sort of likely spend there is. So I think what you could say is the strategy is a huge estimate, but it's the best estimate we have at the time. As time goes on and the capital programme is obviously, it comes about, and obviously we go through that and we realise that actually some of the spend that we might have assumed that even if it was in the budget would happen in that year, being a capital project, not all things happen in one year, and some things will sort of move into other years, and that obviously impacts on the eventual outturns that we have. So what you'll tend to find is it's more than likely the strategy will assume a slightly higher spend than actually happens.
Yeah, I understand that. I was just saying that because the last year everything went up, even like Mr. Dean said, the prices for absolutely everything, all the services went up, and you still managed to underspend the strategy. So just want to say, good job.
I think so. It is primarily slippage. So schemes, I don't know, what have we got? We've got the Brook Theatre, that's quite a big scheme. That slipped. The Healthy Living Centre, that one slipped. You know, this is quite a lot of millions of pounds of slippage in the programme. That's all that is. It's not an underspend. It's still in the programme. Those schemes are still in the programme. But we've just, I think that when officers are projecting in the monitoring what they're going to spend, they assume it's going to happen quicker than it is. It's probably erring on the side of, prudence, I guess.
better be ready
But we
for the
see
worst
this every year.
and expect the best. Better be ready for the worst and expect the best.
Yeah.
Final thing I want to ask about the debt maturing. We have in the next 3 years most of our debts maturing. I mean, obviously that's a plan. Do we have some provision set aside to refinance that loans?
So, as I mentioned at the beginning, the heart of Treasury is looking at making sure we have cash as we need it. So we're not going to borrow or re-borrow or renew it unless we actually have to. So we'll look at the cash that's available at the time the debts are maturing. If we can manage that without re-borrowing, i.e. internally borrowing as such, that's what we'll do. If it comes to the fact that we do have to renew that borrowing externally, then we'll look around for the best options we have. We'll consult with our Treasury advisors over what is an appropriate way forward as to the length of time. And our eventual plan would be that graph has a steady repayment. That's what we'd ideally like to have. It's just that economic factors have meant that short-term borrowing would appear to be the most prudent way forward at this point in time.
I'm conscious I didn't answer your question about the Loughborough money. Yes.
I want to ask if the money will be reinvested in some other housing fund or maybe to diversify in other funds?
But I would rather use that to repay debt than look for another investment.
Just because I'm following the housing market quite closely, there is talk that actually housing prices will start going up again. When mortgage rates start going down, obviously the market, people will start buying more, investors will start buying more, which will mean that the price will shoot up.
So we wouldn't be embarking on commercial investments anyway. But in terms of housing, we're now, you will be aware that a big part of our programme at the moment is £40 million to buy homes for temporary accommodation. So, if as you say, the asset does increase, then that's going to be a good thing, isn't it? But well, once we bought it, yeah. No.
It depends, I suppose, how
I'm in overtime.
Thank you.
So it's Councillor Hackwell.
Councillor Hackwell next.
Thank you, Chair. Just quickly on debt maturity, we've seen this graph for many years looking like this, and I think we all agree it should look like this because of the uncertainty in the marketplace. You say that in the report that it's reviewed. Is that a formal review? I mean, do you sit down once a month or something and say this is what our strategy is going to be, or is it just like something that happens now and then? I mean, I think it should be a formal review, even if you only meet for 5 minutes. It's at least saying that we've done this and we've looked at it and so on and so forth. I have some other questions, but I'm prepared to do it which way you like. I mean,
No, I'll answer that quite quickly. We have very regular meetings with our Treasury advisors. I've got one later this week. We've got another one coming up. Myself and Claire are going to be having monthly meetings, and Phil has, I think, quarterly meetings, certainly, with them, and all these sort of things are discussed at those meetings.
yeah, a little bit further to the graph that we.
Thank you.
we often see with the green and the red lines and the Medway dot. My recollection is the Medway dot's closer to the green line than it's been for very many years. Normally we're sort of like just above the red line. Why is that? What has changed in our strategy to increase that performance?
I expect, obviously, you've got to take everybody into consideration there. What I would say is property funds overall, that they are providing decent returns for us, and that's where most of our investments are. So those sort of investments are fairly good, and I would suggest that's probably why we're probably, as you say, looking like we're doing okay.
Against the back, I hope that the heading in the table in page 101 is incorrect. Otherwise, it means we've borrowed 10 billion from West Midlands Combined Authority. So
That is indeed incorrect. Apologies.
if you come back, finally, just to the table in 12.2. We've got the budget 24-25 and the actual, 23-24 and the actual 22-23. Should that actually be actual 23-24?
Absolutely. Apologies, my mistake again. Sorry about that.
Councillor Lawrence.
Thank you, Chair. I'll get him back later on in our group meeting. I'll find something to pull him up on. I just wanted, obviously lots of new acronyms to get used to in this report compared to others. The overhead available based on the CFR number is diminished from over the last year, and I think it's down to, I think I calculated it to be, I'm sorry for using my phone, but I left my notepad at home. Yeah, it's we're much closer to the CFR limit under this report than we were, and given the 15 million you've borrowed for next year, and I do remember the SIFPA report that the Labour Administration commissioned also raised concerns about the CFR. The more we borrow for revenue, the closer we're getting to that limit. Do we have any concerns, or do you feel as the CFO have any concerns about that limit? If I understand it correctly, we can breach that limit, but we need to only temporarily breach that limit, because going back to what is capital and what is revenue, so for example, we've been doing lots of road repairs and treating it as capital, which would probably be something new, where previously it might have come out of revenue. But that's just one question. So these are more general questions than anything else. As someone interested in investing, we've got basically 88% of our investments are in property. So we've got 107 million in total. 107 million out of 122 million is in property. And I think I'm picking up on Councillor Nesterov's general point about, are we over-invested in property? Now, I know a lot of that's through MDC, and I couldn't quite make the numbers balance on MDC from one part of the report to the other, but I'm not too worried about that. Do we need a different strategy for investing? I'm not looking for an answer today, I'm just posing it, maybe. I understand what you mean, that you're getting a decent return back, but a lot of that return's coming back because MDC are borrowing at quite a high rate, and I imagine that's helping you. But obviously there could be some potential risk in MDC, noting, for example, that they've gone to a buy-to-rent model away from a buy-to-sale model, which is a bit of a red flag for me. The returns, the nice graph showing Medway's returns compared to others, I whispered in Councillor Hackwell's ear, is it possible that everyone else is getting a worse return and we're actually just doing what we've normally done? But I don't mean that as a criticism at all. And finally, the economic outlook report by Link Asset Services is way out of date. I mean, it talks about, inflation is now back below 2%. Councillor Nestrov is right. Interest rates, Bank of England have probably been waiting for a Labour government so they can reduce interest rates. Oh, how dare I? But yeah, thank you.
Phil.
Andy might need to tell me when Link's report came to us, because we'll deal with that one. Yeah.
Yeah.
So you asked a couple of questions. You asked about the I suppose under borrowing position against our CFR. So I think if sort of other things being equal, you would expect your borrowing, if it was all on capital, to be at CFR. So the fact that we're under is a positive thing. Now, and we move within certain tolerances, but the fact is we are, it is a positive thing. Now, obviously, we're in an EFS position where we're going to be borrowing for revenue purposes, so that is inevitably going to close that gap, but that will be this year. But I'm not worried about it. That is the short answer to your question. In terms of the MDC, you talked about the risk around MDC. I mean, we talked a lot about investment here, and Councillor Nestrov about investment. As a local authority, we have never been very kind of, I suppose, aggressive in terms of investment. We've always operated, and I very much do. I'm quite risk averse, as Section 151 officers go. And so, for me, I would rather keep borrowing down than hold cash and invest it. Yeah. But there are authorities that are out there that, especially before SIPFA and the government started clamping down on borrowing to invest in commercial, invested a lot of things in speculative ventures, and their balance sheet will contain a lot of that stuff. But ours won't. And so actually talking about investments in the sense that you guys are talking about is a bit pointless, because apart from that little toe in the water that I did a few years ago for property funds, there isn't any. What little bit of cash we keep for liquidity purposes is in kind of deposits, easy access deposits, Just picking up on that graph, be clear what that graph is showing you. What it's showing is your return relative to the risk appetite that you've got. So anything within those two lines, you're basically receiving a return commensurate with your appetite to risk. So that's okay, and especially when you're talking about someone like us, where we're not investing lots of money in speculative ventures, that's where you'd expect it to be. And it will move in the margins within that line, but it will always be within that line, essentially. MDC isn't a commercial investment. MDC was set up to develop sites that the market wouldn't develop. And I think it's been very successful in doing that. There's hundreds of houses being built in this borough that wouldn't have got built otherwise. And actually, the company, I think, is operating really well. It, like all other developers, has been hit by geopolitical events, the economy, COVID, the war, all of those. Prices of materials, availability of materials becoming difficult, price of materials going up 40-50%. But still, the first site that came out the ground made a profit. So Garrison delivered a profit. Chatham Waterfront is challenging, but that's why there was a change in tack from units for sale to this PRS model that we've adopted at the moment. Now, it doesn't mean that when the market picks up, we can't change tack and sell them again. But I think at the moment, MDC is managing the significant risks it's confronted with really well. So again, I think we're in as good a place as we could be with MDC.
We totally accept the point you make around buildings that would never have got built, and I think it's a credit to MDC and to the council to have the foresight and the previous administration to set that up and to deliver it. So that's really good. And actually, I was talking to Chatham Waters guys recently, because there's an awful lot of build to rent going on over on that area for those exact reasons. So please don't get me wrong, it wasn't a criticism. I'm just asking some questions that come out from the reading of the papers. Thank you.
Just on the
Councillor
PRS,
Hackwell.
just on the PRS in Chatham, we set that company up when we were in administration for PRS. I mean, it was just going to be one block that was going to go PRS. Have we moved on that position? Is it more than one block now, or is it?
So the last conversation I had with MDC, there is one block that's definitely been earmarked. There's two blocks that he's basically said disposal strategy still to be confirmed. So they're assessing the market. You've got to be careful about flooding the market with too many for sale, too many for rent.
Any other questions? May I call on the Vice Chairperson, please?
I move recommendation at page 92 that the committee is asked to note the Treasury Management Outturn Annual Report.
Is that agreed? Thank you.
Excuse me, Chair. I mean, this is very difficult. We've got an air conditioning unit. We've got a disco going on. I mean, this is not very conducive to having a public meeting in this room. Is there anything we can do about that?
I didn't book the room. I mean, yes. What I was going to offer was that we would try to persevere just with items 8 and 9, as we got officers here, and if we could defer 10 and 11 if people are happy with that. And
Chair, Cosington Park's a much nicer location.
don't I just know it?
Yeah,
It opens tomorrow, so
No,
maybe next meeting.
we've had meetings there. It is excellent, and it has air conditioning. Sorry about the sauna, folks, but could I ask James to introduce the internal audit and counter fraud annual surveys, please? And before I start, I'm really disappointed that I couldn't achieve more when asking chief officers to ensure that there was a better outturn for you on that. And I'm going to add something at the end of this.
Thank you, Chair. For the benefit of the committee, some of our performance measures are linked to satisfaction with the service, and we issue surveys to gauge the wider level of satisfaction across the organisation, and the last survey was undertaken in 2023. I don't propose to take you through each individual question, but we'll give you a sort of overview summary of some of the results from each of the surveys, and if it's helpful, I'll pause after each for questions. So the internal audit survey was issued to service managers and higher, including members, as they are the most likely to interact with internal audit. We received 16 responses, and the results are detailed in Appendix 1, starting on page 115 of your pack. The responses were spread over roughly half of the divisions of the council, plus 2 from elected members. There seems to be a good understanding of internal audit's role, but some did confirm that more training or information would be useful. Now, the Charter, which is the key document that sets out our purpose, authority and responsibility, had only been seen by just over 60%, and all those saying that they hadn't seen it were service managers. Now, we are already looking at how the Charter can be distributed more effectively, and we also have internal audit on the agenda for the new Medway manager training sessions, in the hope that that does improve some awareness. All respondents felt sufficiently involved in the preparation of the audit plan and were satisfied with communications about planned reviews. Demonstrating compliance with core principles shows some improvement on previous years, with only a limited number of negative responses, as demonstrated in the chart and table on pages 121 and 122. Overall satisfaction was broken down into 2 areas: satisfaction with services available and satisfaction with services received. This is due to the fact that some respondents may not have had interaction with internal audit over the previous year. Services available scored an average of 9 out of 10, while services received scored 9.15 out of 10 from the 13 respondents who had received services from audit in the last year. Any specific comments we received are detailed in the report along with the appropriate response, and for the first time we received some compliments, one of which singled out our apprentice for praise. I'll pause there if there's any questions on the audit survey.
Sorry, Councillor Hackwell.
Thank you for your report, James. Just out of interest, you said all service level managers and above received it, including 59 members, to actually get. And so, how many was it in total?
I don't know the exact numbers off the top of my head. We've got about 60 service managers, is that about right? And then you've got assistant directors, directors. It didn't go to all of. I don't think it went to all members. It certainly should have gone to all members of the audit committee. Again, it's about who has interaction with us. So in the round, I guess we're thinking around 100 to 120 people should have received it. So I think our response rate's probably in the region of 10%, which is not terrible for a survey, but again, we would hope for more. I think some of that has to do with timing as well. You know, this goes out, obviously we have to do it at the end of the financial year, so it's sort of April time. There's final accounts happening, there's other surveys happening across the organisation. To be honest, I think there might have been a bit of survey overload for staff.
I'd like to make the point that I actually agree with Councillor Lawrence. This should be given more priority. I have written to directors about this, and I would like to propose that actually CMT put it on the calendar and people are mandated to at least interact with it, even if they're not going to give a return to it. They just need to say they've seen it and they haven't time for it or whatever. But I really feel that this has done a disservice to very fine service and very fine officers. And I've had written excuses as to why, and it might be the timing, and maybe there is something that you could do about combining it with another survey that people consider more important, and I don't agree. So I would like to move that we put this onto the CMT calendar for review and comment.
I'll take that back. I'll take that feedback back. I've heard the message loud and clear. So.
Thank you.
Chair, can I just comment on these types of surveys really work if staff feel they're going to be able to influence something. So, you know, this whole "you said we did" is a really powerful message for staff engagement. So if you're asking opinions and on one item you get a negative response, then you actually take that on board and go, you said about this, we subsequently did. And actually people feel empowered that the survey actually means something, even for very senior officers. But also, you know, in terms of objective setting...
Very helpful.
Yeah, objective setting, officers at that level should actually...
Thank you, Chair. I was going to say about the same thing, that it seems that the participants in the survey are going down year by year, getting less and less. I would just want to make a couple of suggestions, maybe how to make it more appealing to people.
Okay, well, can I leave that with Phil? Because we have now mandated him to have a look at it.
Okay.
Thank you.
Yeah.
Okay, yeah, I'll move on to the counter fraud survey, the results of which can be found in Appendix 2, starting on page 127. So that survey was made available to all council employees and elected members, and we received 37 responses. That's obviously lower than previous years. The first year we did it, we had 200 responses, which was phenomenal, and it's gone down slightly both years since. There are still high numbers of people who have not seen and read the counter fraud and corruption strategy, so as with the internal audit charter, we need to find a suitable means of dissemination. Awareness of our services was reasonably high amongst the respondents, but disappointing, the numbers who had received fraud awareness training was very low. Given that we know more than 100 people attended training sessions with us over a period of a few months, but only 5 were amongst those responding to the survey. As I say, that's a bit unfortunate. Almost 70% said that their team would benefit from awareness training, which is still available on a monthly basis, and we are trying to push that through workforce development. The lack of awareness amongst those responding contributes to the fact that there was a significant drop in the number of respondents aware of what areas were covered by counter fraud, and a high number still aware of how to report concerns. And again, that's despite all the effort that's gone into fraud awareness. It again raises the question of whether things are going unreported simply because people don't know what or how to report it. We adopted a set of core principles in 2021 and asked respondents to confirm whether they agreed these are demonstrated by the team. The chart and table starting on page 136 shows some comparison on these responses against those received in 2022 and 23. As you will see, the number of disagree statements has reduced in all areas, but strongly disagree statements has increased. Some of this, again, may be linked to the lack of awareness of the team, and that is reflected in some of the comments that because we asked people to state why they disagreed, although some other areas for improvement were identified. Satisfaction with services available scored an average of 6.68 out of 10, which is a reduction on the previous year. But the 10 respondents who confirmed having received services from the team in the last 12 months scored an average of 8.2 out of 10, with positive satisfaction, so that's a score of 8 or higher from 70% of those. Again, any comments or compliments received are detailed with responses as appropriate, and I'm happy to take any questions.
Any members?
Just a general one. What do you think we can do differently next year to increase the respondents?
That's a good question. To be perfectly honest, I'm not entirely sure at this point. As I say, I think the timing, because we need to do it at the end of the year so that we can get a result for our annual report. I think timing, there was other surveys happening at the same time, and I do think there was a bit of survey overload. The other thing is, I think the distribution of the survey initially was purely via the intranet, and people don't always see it. In the last 2 years, it had been sent out via email. That did happen eventually, but by then we were a week or two down the line, so again, it limited the opportunity to respond. I'm hoping that's part of the reason for it going down quite a bit. But yeah, I think we're going to have to look at how we get that survey out and try and promote it.
Give them some prizes, maybe.
I'll refer to the Chief Operating Officer for a budget for that one.
Phil, thank you.
So I was pondering on the comment that Councillor Lawrence made, actually, about the you said we did, and maybe we need to think about the survey not just asking how was it for you, but how could we make it better, and put some of that kind of line of inquiry into the survey to make it.
Yeah, we do give people the opportunity to make other comments, but maybe we need to be more specific about that, yeah. And some information that goes out with it about what we've done following the previous survey might be useful as well.
Any member? Okay, can I move on to the Vice Chair, please?
I move the recommendation at page 111 that the committee note the results of the internal audit and counter-fraud satisfaction surveys, and the committee moves to make interaction with the survey mandatory or other ways to make response rates better. Yeah, and to increase responses. So,
can you also move on item 9, please?
I move the recommendation at page 143 that the committee note the report.
Is that agreed? Or do you have any more questions? That was 9. We moved 8. And I'm taking 9 as well with it. Yeah. Agreed. Does the committee want to continue with the meeting or to defer items 10 and 11? I'm proposing a deferral, but if you want to continue, I'm happy to do so. But you guys are going to meetings.
She done item 9, talked about the savings and all the rest of it. I don't think we
No,
have.
it
have
was
we?
the National Fraud Initiative exercise, was it?
No, we haven't
Oh, I
done
beg
that.
your pardon. It was just a fraud report. I beg your pardon,
Sorry,
Councillor
I
Hartwell.
paused between
my,
the two
My
servers.
fault. Sorry, James.
That's all right. Members last received an update on the NFI exercises in June 23, detailing the progress with the 2020-21, 21-22 and 22-23 exercises. Since the last update, we've made significant progress with the work from those exercises and the more recent 23-24 exercise. I should point out that other services are involved in the checking of some of the matches, although ongoing resource pressures has meant that the fraud team have been responsible for checking the majority of them. We've now carried out a significant amount of work in connection to the 22-23 exercise, and it is now almost concluded, including a lot of work on finance matches that have not been checked in the past, with just a few matches outstanding. The 23-24 exercise is up to date in terms of the matches being checked, and anything outstanding now relates to decisions from the Council Tax Service. Data submissions for 24-25 will take place in October, and we have now been told they're bringing the issue of the matching results forward a month, so we should get those on the 20th of December. Quite what benefit we're going to get from receiving them a couple of days before Christmas, I'm not sure, but they are bringing it forward. The financial savings noted in the financial implications show the results from the two exercises to date, but please note these are not wholly in addition to savings detailed in any fraud updates that members have received. Any activity dealt with by the counter fraud team is recorded as part of our updates and includes cases that may have been generated as a result of NFI data matching, and I will happily answer any questions.
Councillor Hackwell.
Thank you, Chair. James, thank you for the report again. I'd just really like to pick up on the blue badge, because the majority of your savings or potential savings comes from the blue badge cancellation. Just to get a feel for those blue badges, the 500 blue badges that got cancelled, how many of those do you think were actually being used fraudulently, or how many of it is, mum's died and I haven't returned the blue badge because it wasn't at the top of my priority list? Just to get a feel of whether that 500,000 is real, or as in fraud, rather than just pure mistakes.
Yeah, that 500,000 is notional. It's the savings figure that the Cabinet Office attached to the cancellation of the badge. Essentially, the fact that the person was deceased and the badge was still, in theory, in circulation meant the potential for misuse was there. So by cancelling it and having it returned, you've notionally saved that money. The level of fraud or misuse that's happening, it's difficult to quantify because we're reliant on reports of it. We do get some reports, unfortunately. A lot of it, one I'm getting a lot of calls about at the moment relates to family members using the badge to park in a disabled bay outside the resident's address, but that's perfectly legitimate because the car is there should they need to take that disabled person out. So it's not misused, but in the eyes of the public, they're not happy about it. So we do get some reports, we do look into it. The CEOs, so the traffic wardens, do keep an eye out for things as well. We've got a good working relationship. I want to get some proactive work happening where we can go out and do enforcement days and things like that, but it's capacity and being able to do it, unfortunately, not just for us, but for the parking team as well.
Councillor Lawrence.
Thank you, Chair. Just one of my favourite subjects, which is Medway 2.0. Actually pulling all this data into a single data source would make this would all happen in real time, not twice a year. Because obviously identifying fraud is one thing, recovering monies lost from fraud is a totally different kettle of fish, isn't it? So, that's why Medway 2.0 is such an essential project for the council, as well as streamlining hundreds of different processes across the council. So it's just a general comment. I'm just wondering how much, fraud is not the right word, but how much overpayment in salaries where people leave and then are paid accidentally because the manager hasn't got the leavers form back or whatever that process is. And can we quantify that in any way? Because I noticed there were payroll matches here, but I'm not sure that's the reason for the payroll match. And what success we have in recovering those overpayments? Thank you, Chair.
Yeah, the payroll matches that you see here are where people appear on more than one employer's payroll, or some of them match to pensions, so an employee is in receipt of a pension, has that been noted for tax and other things like that. Members actually appear on some of these lists because obviously they're paid an allowance as a member, but many of you will have substantive jobs, so obviously it comes up. We don't investigate those because we know it's perfectly legitimate reason. There isn't anything about overpayment of salary matching. I'd have to speak to HR and payroll to get an idea of what sort of... I don't think the figures are going to be huge, but no, I'm not. It's a spoiler. You'll find out once the sentence has happened. We have had a conviction linked to something, so I'd have to check with HR on that.
If we could just have that as a bit of information as a follow-up to this meeting, that would be really useful. Yeah.
Would that be appropriate to be reported at business support where we've got HR in attendance, or do you want HR to come here?
Just do it as an information item, Chair.
Oh, okay.
Post this. You don't need to drag officers here to talk about it.
Okay, thank you. Do we have any more questions? May I call on the Vice Chair then, please?
I move the recommendation at page 143 that the committee note the reports and that the discrepancies in payroll will be reported back to the committee.
That's seconded? Thank you. Agreed? Thank you. Now I'm back to the point that I was at wrongly. Does the committee want to continue on items 10 and 11, or do you wish to have them deferred?
We're deferred. We're already late for our group meeting, so...
Okay. So are we. Thank you.